You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Reema and Surabhi in full festive gear. Guys, hi.
Hi.
Good afternoon.
Hello.
And for those of you who are joining us now, I'll once again like to wish everyone a very happy Ganesh Chaturthi from the entire team here at CNBC-TV18. And of course, Nigel joins us from the newsroom floor as well. So, Nigel, hi, good afternoon. Things are looking a little down. It's tomorrow, of course, is a market holiday. And anecdotally, I think one can figure out that a lot of people are not at their desks, not at work. It's a kind of a long weekend. Of course, the mood is festive. It's a slightly down day. I mean, 40 points down, 20,154. Similar kind of picture on the bank nifty, on mid and small cap indices as well. There's not very much which is going on. I just want to put out quickly two levels, and then we'll move on. So for the Nifty, and these are the same levels we put out in the morning, the support comes in at about 19,914. Keep an eye out on that number. We are at about 2154, so not very far away. On the Bank Nifty, the support comes in at 45,674. So these are two levels which ideally we should not break on the downside if this is an uptrend, and we want to build on it. Remember, last week the Nifty and the Bank Nifty did between 1.5% and 2%, while even after Tuesday's dramatic 4% correction, the mid and small cap part of the market ended absolutely flat. So there was a fair bit of repair. So just those levels should hold. You know, a day of kind of sideways price action doesn't mean very much. So I guess that's where we are. Tomorrow, as I said, is a market holiday. And on Wednesday, we trade. Later that evening, we get the Fed decision. And Tuesday then becomes important in that sense. Reema.
Hi, but it's just been a very, very quiet range-bound day, right? Largely in the red. At the session highs, the Nifty was only up 3 points. At the session low, which was early in trade in the first 15 minutes, the Nifty was down 70 points. But other than that, as you can see, markets have been pretty much flatlining, but with a negative bias. And in the last, 2 hours or so, from 12 o'clock to 2:30, 2.5 hours, you've seen a bit of a grind down. But again, by the end of it, we're still just lower by 35 points. Big central bank action, not just the Fed. You've also got the BOE, UK, Bank of England, will be announcing its rate decision, Swiss National Bank, and the important one could be Bank of Japan on Friday. But the action is all in the PSU banking space. The Nifty PSU banking index is up more than 4% for the day. This month, it's seen a rally of 17.5% and big outperformance versus even the benchmark Nifty Bank. The Nifty banking index is currently in the red at a time when the Nifty banking index is up, PSU banking index is up close to about 4%. And individual stocks like Central Bank, UCO Bank, IOB are all up 50-55% in this month itself. It's phenomenal what we're seeing there.
Oh, yes, absolutely. Some of these stocks are clocking gains of 18, 19, 20% right now. In fact, in the mid-cap basket, this is the one super green spot. Otherwise, mid-caps are a little lackluster today. And some of the areas which have had a sharp run-up, like sugar, for instance, they're cooling off. Look at some of the sugar stocks. They're down in the red. That's the mid-cap screen for you. Mid-cap index falling a little more than the large-cap names today. And the advanced decline is negative. So mid-cap's a little quieter. But I do want to talk about the festive cheer that's very evident in the stocks that are rising on the Nifty. Maybe it's, guys, maybe it's my mindset, which is like pretty happy ahead of the midweek holiday. But there's a bit of festive fervor in the kind of stocks that are moving higher. Look at Titan. Look at all the auto names that are up and about, from a Bajaj Auto to Mahindra & Mahindra to Hero to Maruti. So auto is up, Titan is up. We eat and drink a lot during the festive season, right? So a lot of the FMCG stocks, whether it's Britannia, Lever, or even ITC. ITC has a FMCG business, please don't forget that. So that's up and about. We paint our houses typically at this time of the year, so Asian Paints is up. So for me, the way I see this afternoon, there's a nice festive run going on, even though the underlying trend on the bigger side of the market, the big boys, IT and banks, so they're not playing ball right now. But otherwise, there's some green cheer, which signifies the season that has just started. Nigel, what are you tracking?
Well, difficult to focus on the market, right, Surabhi, when you're talking about eating and drinking, and that too ahead of a nice truncated week. But we need to focus on the market action. And we'll have the Nifty Financial Services Index, by the way, where expiry will play out, because normally it's on Tuesday. But since Tuesday is a holiday, so cheers to that. We'll be playing out expiry today. So just keep an eye out on the Nifty Financial Services Index. I'm looking at the Nifty options data. And just a quick couple of points I want to make. The 20,200 call, that has the highest open interest. In fact, the open interest has nearly doubled today. Currently, the total open interest there is 1.3 crore shares. So massive build-up in terms of open interest. The premium out there from around 100 rupees, it's come down to around 55 rupees. You're getting a sense that the bears believe that they can defend this 20,300 odd mark on the upside. On the downside, though, on the put side, you have the 20,100 put that has the highest open interest. The open interest, total open interest out there as well is close to around a crore shares odd. And the premium is roughly around 43 rupees. It's more or less, status quo. Even though the markets are lower, you're not making any money if you have bought that particular strike. So that is evidence that there is writing out there. So the broad range that I'm looking at is the 20,050 mark on the downside, since the 20,100 put has the highest open interest. And on the upside, since 20,300 call has the highest open interest, with premium around 100 rupees, that 20,300 odd marks becomes a bit of a zone. So we have the range, the near-term range for the bulls and the bears. They'll be looking, to slug it out in this range itself. The question is, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us with his closing strategies. Hi Mitesh, good afternoon. Your reading of today's session, not so bad, right? Given the kind of cues that we had at the start, you don't see any big cut. Par for the course, 30-40 point downtick.
Good afternoon, Nigel. I think you're right. The resilience has been very good, but also is the fact that the trend is on the downside. My only worry is that, there are now signs of the expansion, the indicators which indicate, that the market will be expanding are slightly, have started to turn southwards, which means that we might be in for some consolidation. Broadly, it looks like that the Nifty, in the first phase should look at the support which happened on Friday. So the gap up which happened on Friday, I think that was not filled. We got a high of this thing. So we got a level of around 20,100 over there and then 20,050. So I think that's the level to watch out for. As long as we are about 20,050, I think the trend should be okay. And we might just do some kind of time-wise correction for next 1-2 days. Mild choppiness would be there on an intraday basis. But if we don't break 20,050, then I think we should possibly retest the highs of 2,200 and head higher. On the bank Nifty, I'm waiting for this 46,200 to be taken out. Till that happens, I think again the bank Nifty will also be slightly constrained and be sideways. So trading since Friday afternoon has been more stock specific. I have in fact one buy and one sell call right now. Dixon Technologies is breaking down after a good rally, so that's a sell with a stop at 5,000. Look for targets of around 4,800 on the downside. And Container Corporation, that's on the buying side. Good movement on the upside over here with volume support. So that's a buy with a stop at 720 for targets of 765.
Okay, all right, got that. Mitesh, thanks very much for all the trading calls. We'll come back to you in a bit and get some more going. Right now, the market continues to be, pretty much in a very tight range. That's where we've spent the bulk of for the day. Hemang Jani is joining us on the show. Good afternoon, Hemang, and festive greetings to you as well. So let me start. I was just highlighting to all my colleagues here that let's not get bogged down with the red. There is some festive cheer in the market. So let's say if you were to, pick one or two stocks to play this festive buying, festive splurging theme, which stocks would that be? First of all, would you play the theme? And if yes, which stocks?
Having me and festive greetings to all the viewers and team members at CNBC. I think we are in for a good amount of action starting this festive season. And if I were to play this, let's say short-term to medium-term kind of a time frame, I think clearly PSU banks appear to be, the best place to really play this because we're seeing a bit of a re-rating here. And after a long time, a 13-year high PSU index. And when you look at the companies, both in terms of operating performance, in terms of ROA, which is touching 1%, and the earnings expectations over the next 2 years in the range of about 23 to 25%. So it has all the ingredients when we are all talking about some sort of a froth in the mid-cap and the small-cap category. This is one space which is giving you that valuation comfort. So I would definitely go out and look for some opportunities within this space, either through the larger name like State Bank of India or some of the smaller banks, be it Can Bank, Union Bank, UB. So I think this is one pocket which gives a lot of comfort at this point.
Hemang, we've seen an explosive rally in defense names. Stocks have practically doubled in the last few months. And all this is predicated on some strong spending by the government. The number of orders that these companies have got has been quite, something that we've not seen in a very, very long time. And of course, indigenization has been the second trend. But can we assume these kind of order inflows, this government capex to continue for the next few years?
It's not changing. I don't know whether it is because of this, geopolitical issues and the tensions that we have at China border. But the kind of run-up that we have seen across some names, some of them have actually gone up about 4 to 5 times, and many of them have gone up more than 20-25%. But when you look at the actual data, whether it in terms of the revenue growth, margins, etc., it is not showing any kind of a meaningful growth as such. So I think there's a case for some sort of profit booking here. And I would certainly look out for, some other pockets, deploy this money or remain in cash. Because defense, though in terms of headline and in terms of narrative, is a big theme. But when you look at the actual company's numbers, the top line growth has been hardly about 8 to 12%. Margins are okay. And large part of the income is driven by other income. So I think, there is some sort of overvaluation for defense at this point of time.
Okay. Some overvaluation with defense. Well, there's another topic which I think is of a fair bit of interest to the bond markets, money markets. The huge tax outflow of 2.38 trillion rupees, that is 2.38 lakh crores, by way of advanced taxes is having its repercussions on the money and bond markets. Overnight rates are touching 6.9% versus RBI's repo rate, which is at 6.5%. Lata is here with more details on this. Lata, over to you.
Yes, that's right. The advanced tax outflows have been larger than people estimated at almost 2.4 trillion. And that's led to a lot of tightness because that money flows out of the banking system into the government. As a result, the one-day money that banks borrow from one another to meet temporary funding requirements, that's shot up to 6.9%. The normal rate is 6.5%, which is the repo rate. Now, the banks have to be prepared for further outflows, which will happen when GSTs have to be paid on September 20th. Today, you can see that banks have borrowed 67,000 odd crores, actually 67,576 crore from Reserve Bank to meet these funding mismatches. Further, there will be another 25,000 crore which will be released on September 23rd and then on October 1st when the ICRR, incremental CRR, unwinds. But that's not going to be enough because the outflow is much more. Unless the government spends the liquidity that it has got through advanced taxes, the liquidity crunch will continue. And for bankers, the fear is that these higher bond money market yields and bond yields is going to hit their trading book if it continues till September 30th. There will be MTM, mark-to-market losses. The banks are a little scared that Reserve Bank may continue to keep the liquidity tight because of the fear of inflation and asset inflation, the rise in, mid-cap, small-cap stocks. The fear is also that the dollar has risen a lot, and to protect the rupee as well, Reserve Bank could keep liquidity tight and near-term, short-term yields high. So bankers are a worried lot today.
Got it. Thanks a lot for that, Lata. Thanks for explaining that to us. For the time being, though, we'll slip into a short break. On the other side, Vinay Paharia, the Chief Investment Officer at PGIM India Mutual Fund, will be waiting by to discuss market themes with us.
Welcome back. Power stocks are getting more powerful. Power Grid, NTPC have surged 2 to 3%, and now they're the top gainers on the Nifty. Power Grid up 2.8%. NTPC is up 2.4%. But the sector in the limelight continues to be PSU banking. The market capitalization of the PSU banks has crossed 12 lakh crore. In fact, of that, 2.5 lakh crore has been added only in the last 10 months. Abhishek is standing by at the big wall with more details on what's driving this PSU banking mega rally that we're seeing, and of course, even on valuations too.
Well, to begin with, PSU banks have been the favorites of investors over the last 1 year or last few quarters. So let's take a look at the fundamentals of PSU banks over the last 1 year. Now, take a look at the loan growth. PSU banks have seen a significant loan growth of about 11.78 lakh crore on the incremental side over the last 1 year. So amongst PSU banks in last 1 year, what you have seen is that many have seen their asset quality being best in many years. Gross NPA ratio has declined for all the PSU banks combined by about 277 basis points over the last 1 year. It's declined from 7.52% in Q1 FY23 to about 4.76% in Q1 FY24. In terms of value-wise, the gross NPA decline has been around 27% on a YY basis. Now, PSU banks have managed to reduce their quarterly slippages by about 31.5% YOY. So the annualized quarterly slippage ratio has decreased to about 1.3% in Q1 FY24 when compared to 2.17% on a YOY basis. Take a look at the restructured book. PSU banks have reduced their restructured book in value-wise by about a little more than 28% YOY. So PSU banks have witnessed significant growth in their operating profits due to reduction in the stress, with a YOY increase of about 55.5% in Q1 FY24. PAT has grown substantially as well by about 124.5% YOY. So this has helped the return ratios to improve a lot for the PSU banks on a YOY basis. However, PAT appears to be almost flat on a sequential basis, that is Q1 FY24 versus Q4 FY23. It's important to note that these positive trends in loan growth, asset quality and profitability are generally indicative of an improving financial health of PSU banks. Now, many PSU banks have experienced significant gains in their valuations over the last 1 year, largely led by improving fundamentals of the PSU banks and the cheap valuations earlier. So top performers, if you take a look on a YOY basis, is UCO Bank, Central Bank of India, Indian Overseas Bank and Bank of Maharashtra, who have seen their valuations more than double over the last 1 year. Now, SBI's valuation have actually declined, or it is the only PSU banks to witness a decline in valuation on a YOY basis. So, year on year, SBI's valuation have actually slipped a bit when compared to same time last year. Amongst PSU banks who have lost on, gain majority on the price wise is Indian Overseas Bank and UCO Bank. Currently, the most expensive valuations have been of these banks. Cheapest valuations, Punjab National Bank, Union Bank of India and Canara Bank, they are the ones who have the cheapest valuations amongst PSU banks. Interestingly, as of today, IOB, that is Indian Overseas Bank market capitalization, is higher than that of PNB. If you take a look at their loan book size, IOB has a loan book of just rupees 1.8 lakh crore, while PNB has a substantially higher loan book size of about 8.6 lakh crore. Now, some of the top holdings by Government of India in PSU banks are IOB at 96%, UCO Bank at 95%, Central Bank of India at about 93% and Bank of Maharashtra at 86%. So free float in some of these PSU banks are on the lower side. Back to you.
All right, Abhishek, thank you so much. That was stunning. The image or the figure that will stay with me from that entire analysis is IOB's valuations at almost double that of State Bank of India. What a journey some of these smaller PSU banks have had from the 2017 high NPA cycle levels of 22-23%. In fact, speaking of PSU banks, today we were in conversation with a large PSU bank. Bank of Baroda is the one that I'm talking about. Spoke about some of the company's new initiatives, including their new festive campaign. BOB is very, very clear. They're looking to grow the loan book primarily on the retail side. In fact, they told us that they're growing their retail book 3 to 4% faster than the rest of the industry, and unsecured lending is really sort of breaking away in terms of that loan growth outlook. Take a look.
Maximum traction, of course, is in the retail segment. So we have been growing at around plus 20% levels over the last couple of years. Actually, that's above industry. The industry has been growing retail at around even 20% levels in the industry. Also, we have grown almost 3 to 4% higher than industry. So from that perspective, I think we think we would be able to continue that sort of a momentum as far as the retail space is concerned. That's the fastest growing segment as I look at it, even for our bank. Unsecured loan for us, of course, is the highest growing in terms of percentage terms, but I think we are at a lower base. We see a credit growth of around 14 to 15% overall. And on the retail side, it would be plus 20% definitely. So we have given a guidance of around of doing a similar kind of a NIM, which was there for the full year last year. So there could be some inter-quarter sort of plus minuses, but for a full year NIM, we stick to a near about NIM of which we had last year, which was around that 3.3 levels.
All right, let's take this discussion forward. To help us out with the outlook on markets as well as how is he positioned. Well, we have Vinay Paharia, the Chief Investment Officer, who joins us from PGIM India Mutual Fund. Hi, Vinay. Good afternoon. Good to speak to you after a while. Well, since we're discussing PSUs, I wanted your take on it. How do you approach the banking theme? And the PSU banks, yes, they've seen a big price move. But do you think still valuations are supportive? And will you still look to invest in them, or will you stick to the larger private sector banks?
Hi, Nigel. Good afternoon, and thank you for having me on the show. So I would just want to highlight a broader big picture theme, which is not just PSU banks, but many other sectors of the market have a very similar theme. And this theme is that companies which have got weaker returns on equity and weaker earnings growth historically are actually doing very well in the markets in the current cycle, it seems. And many of the banks which you talked about also possess the same characteristic. And hence, our approach is very clear that we would want to invest in companies which have historically had a very strong business quality and have a sustainable growth expectation. And many of these banks do not fit in that criteria.
Okay, so that's pretty clear. Many of these banks don't fit into that criteria. 45 points lower now, by the way, on the Nifty. Vinay, hi, good afternoon. Prashant here. So tell us, I mean, what's coming up on your radar in terms of, favorable absolute risk reward, not relative to a benchmark, but in terms of absolute returns, what makes sense from here?
I think there are a lot of private sector banking services entities, large ones, companies in the consumer discretionary space, healthcare space, especially on the hospital side. Most of these look good on an absolute basis, not just relative. So I think there are lots of pockets in the markets which are attractive even today.
You mean, sorry, I saw Varun Beverages in your... Do you still own Varun Beverages, Vinay?
Sorry, Prashant, I can't talk about individual names.
Okay.
But suffice it to highlight that companies which have demonstrated strong sustainable growth and quality are definitely ones which are part of our portfolios.
I believe PGIM per se had turned a bit cautious on industrials, maybe a couple of weeks back.
Hi, good afternoon, Rima. So, Rima, one of the common threads which we have observed in industrial sector per se is that most of these are good quality companies and they are also expected to grow fast. But the market seems to have re-rated almost the entire pack so much that we would have borrowed 1 or 2 years of returns from the future in most of the companies in this sector. And hence, we have reduced our exposure to this sector purely for valuation reasons.
You've reduced it across the board, or and to what extent have you reduced it? Suppose if you had 100 shares or 100 crores worth of exposure, what does it stand at now?
It would be different across different funds, and when we talk about reduction, we actually were significantly overweight the industrial sector about 6 months back, and from that position, we have reduced our exposure. So that's where I'm coming from.
So now it's neutral from significant overweight, or are you underweight now?
A little underweight. We are a little underweight.
Okay, interesting. So booking profits after this mega industrial rally, Vinay. Interesting to know that. So where are you shifting the money? Where are you putting it?
Hi, Surbi. As I highlighted, some of our preferred sectors are financials, especially private sector financials, private sector NBFCs, consumer discretionary space, healthcare space. These are some of the places where we are finding in opportunities, sometimes on an absolute basis, sometimes on relative basis.
Okay, let me just ask a follow-up on the first piece that you mentioned, private sector financials and NBFCs. It's a large universe, Vinay. So, give me some sense of what is it that you're looking at. The good thing is that probably valuations are on their side. I mean, our colleagues were just, highlighting how, let's say, on the PSU side, SBI's valuation versus some of these mid-cap banks that have completely gone in a different orbit. So when you're talking NBFCs or you're talking private financials, aside of valuation, what else are you looking at in terms of the kicker that makes the cut for you?
Yeah, sure. So what we want to look at in companies is sustainable returns on equity in their businesses and sustainable growth rates. So our objective is to buy such companies and remain invested for a very long period of time without touching them till the time the fundamentals remain intact. So I think those are the type of companies which we are looking out, and many of the companies in financials and NBFC space do fulfill those criterions.
Vinay, I think you had a view on Ferris stocks, and maybe a few quarters ago you were a little bit positive on one of the larger names, Tata Steel, if I'm not mistaken. What's your fresh take on metals and Ferris in particular? Because the signs are that the Chinese economy is going to try to revive. If that's the case, they consume more steel that they of what they make, and they'll export less. Also, there'll be restrictions on the production side, which could bode well for our guys here in India. Your take on it?
Yeah, so Nigel, what you are saying may be true on a near-term basis. In the next 6 months, probably some of the cyclical companies may benefit out of these trends. But we think that many of these trends are temporary, and as an investor, it is very difficult to extrapolate this for a long period of time into the future. And hence, there are many opportunities where you can clearly see a structural trend which is visible, companies which are clearly having stronger growth profile. And hence, we have shifted a lot of the monies towards those kind of companies where there is a clear and sustainable growth rate which is visible, and also companies which have got a stronger ROE.
Vinay, out of time, but thank you very much for joining in. Enjoy your holiday tomorrow. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter. We also get you a few buy today, sell tomorrow calls from our technical expert.
Welcome back. Well, the market's sitting with a cut-off around 40-45 points, as we've been seeing earlier, par for the course. The problem today is the Nifty Bank. That's down close to around 220 points odd. But it's that time of the day where we turn our attention to D-Street chatter. Nimesh joins us to give us an insight in what you're picking up. Nimesh, what are you picking up?
Nigel, quiet day, so to speak. Not much happening. But again, for the last few days, the trend has been the screen looks bad, and that is the day when you see basket buying. And the day when the markets are good, there is a basket selling. So today, the screen is not suggesting, but I understand there is a basket buying at a leading FIDs, and that's largely into the Nifty name. So in that sense, it stands out that there is so institutional volumes are going to be on the higher side in today's trade. Having said that, the big theme seems to be the PSUs. The PSU bank index is up 5%. All the stocks are up between 5% to 20%. And no specific reason to explain these moves, right? But then they are moving up in trade today. I guess from a macro point of view, all eyes will be on the Fed outcome on Wednesday. So that can have a bit of a temporary sentiment across emerging markets, including India as well. So that's something to track going forward. But I guess the trend of the QIPs, the block deals, that's likely to continue. And probably you'll see a couple of more deals in this week itself. Of course, we have a truncated week, but post Wednesday, you could see some fundraising as well. So that trend continues. But I guess the theme seems to be PSUs, and PSUs.
Nimesh, I'm wondering, talking about OFSs, I'm wondering the government of India, at least 4-5 banks that I was looking at, more than 95%, 95+% stake in some of these PSU banking. And they must be saying, such a good time, let's offload some stake.
But it's not happening, right?
Yeah, it's not yet happened.
We put out a piece saying on these valuations, the government can raise at least 1.8 lakh crores, but just coming to 75%. So, but that's how government is, right? I mean, whenever they want to do, they'll do it.
Let's see how that goes. But individual stocks, you're picking up some information.
So, okay, in terms of individual names, the first stock on my list is Time Technoplast. It's been buzzing off late, but again, the street is expecting some corporate development with regards to monetization of their overseas assets. So that is something to track in Time Techno going forward. So that's the first one. The second stock is Senco Gold, a recent listing. Quietly, that stock is up 15% in the last 1 month itself. And I understand a domestic PMS is an active buyer in this particular stock in the last many days. So the volumes are on the higher side because of that. The third stock is Jubilant Foodworks. Again, consolidating off late, but again, looks like at these levels, some sort of buying interest seems to be back for the last couple of days. The delivery volume is on the higher side, and even in today's trade, there are buy flows at FIDs. So that's Jubilant Foodworks. And the last stock is BEL. The entire PSU basket is buzzing. The defense theme is buzzing in trade today. But I understand towards the end, there is a small market at close basket selling at a leading FIDs, which includes BEL as well. So probably we'll see some bit of profit booking in the last half an hour of trade in BEL today.
Okay, Nimesh, thank you very much for that. By the way, I have to say, Nimesh was telling me earlier that usually, to get 4 pieces of information, he needs to make 4 phone calls. Today, he's had to make 6. Nimesh?
And still I struggled. Honestly, Prashant, dull day, so to speak. A lot of people are on leave, truncated week as well. So today was a real struggle to get some chatter out of the way.
I heard everyone's on the road because, people like my husband's complaining that, oh God, all the roads are jammed. He's out for a meeting and he's like, I'm taking forever.
By the way, for those of you, for Rima, it'll make a lot of difference to you. Actually, it'll make a lot of difference to all of us. The bridge, right? When you get out of our office and
I'm going to try today.
The Curry Road Bridge, basically. Not the Curry Road Bridge, the bridge which connects Low Parel to Curry Road. That
Delisle. I think it's called
Delisle Road Bridge. That is reopened.
This calls for a drum roll. This is after 5 years, I think. Celebrations, drum roll.
Because both of us are constantly complaining about it.
So I promptly sent our reporter and to the ground
to get visuals.
And, get visuals, and we'll have that up on the channel in just a bit.
That's one historic achievement. One bridge opened in 5 years. The other, which is Western Suburbs Andheri, we will take positive cues from you all.
I mean, that bridge opening is the biggest news in South Bombay today. I can tell you that. I mean, absolutely no question. Competition. Well, Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, hi. Good afternoon. How are things looking? Slightly lower today.
Yeah. So yes, it's a mildly weakish kind of a setup. My belief is that, as I was saying, that the expanding indicators have started to turn slightly southwards on the hourly and the 2-hourly charts. Most likely, this is an early sign of consolidation. Few days, I think the market may not make a new high, or even if it makes some new high, it will not be significantly higher high, and we'll see some kind of consolidation happening. So initial understanding is, Prashant, that 20,050 on the downside is the level to watch on Nifty, and what 45,700, 750 on the bank Nifty is the level to watch. If these levels hold, then I think all is well. In case we see some kind of decline below them, then I will slightly worried and be aggressive in exiting long positions. On index, we don't have any positions, but on the stock side also, I think we'll cut down long positions if the index starts to show signs of a pullback. So for the time being, I have Kotak Bank as a STBT. That's one has been underperforming and hasn't participated, and the structure is weak. So here, take a STBT with a stop at about 1806 and a target of 1785. And M&M, I would recommend, on the BTS your buying side, keep a stop below 1630 here and a target of 1665 can be looked at.
Okay, thank you very much for that. Taking cue from the automotive space, Bajaj Auto has been in focus, with Bank of America upgrading the stock to a buy. And also on the occasion of the festive season, Parikshit is here with the key takeaways of his exclusive conversation with Rajiv Bajaj earlier today. Parikshit.
Well, 5 big takeaways from that interview with Rajiv Bajaj. Number one, Rajiv hinted at launching the world's first CNG motorcycle. He said this could be a disruptor in the 100cc segment where Bajaj Auto has lagged behind. He also urged the finance minister to cut GST on CNG vehicles like CNG 3-wheelers, CNG 2-wheelers from 28% to 18%. Bajaj Auto market share has climbed to 30% in the mid-market 125 to 200cc segment, and Rajiv Bajaj said that they are now targeting the number 1 spot in the mid-market segment. Also increasing the production of the Chetak electric scooter from 8,000 in August to somewhere in the range of 10,000 to 15,000 by the end of this fiscal. He also told us exclusively that Bajaj Auto has a plan to take up EV production capacity upwards of 40,000 and closer to 1 lakh. And this roadmap is going to be presented to the board of Bajaj Auto in FY25 as well. The biggest Pulsar ever will be launched in this fiscal. Rajiv had earlier said that they will be paying homage to the Pulsar, which was launched in 2001. So apart from the biggest Pulsar, there will be 6 significant upgrades to the Pulsar motorcycle also within this fiscal. And lastly, as far as the Triumph motorcycle, which was launched in July, the company is hoping to take up sales of the Triumph motorcycle to 10,000 per month by January. And they're looking at a total capacity of 35,000 motorcycles per month in the premium segment. So premiumization is going to be the big strategy and focus of Bajaj Auto going forward.
The entry segment, which is the 100cc motorcycle, this continues to be under pressure for the industry as a whole. For Bajaj, as you know, this is not a major area of focus. So in that sense, it's not a priority for us. The mid-market, which we define as kind of 125 to 200cc, typically a ex-showroom price of 80,000 to about 1.7 lakhs of rupees. This is what is growing very strongly in recent times. Between now and the end of the financial year, over the next 6 months, we would introduce 6 significant upgrades or new Pulsars, all aimed, quite frankly, at further enhancing our share in this mid-segment. And in the near term, our goal is that in the month of January, as I said, on the back of these 3 elements, the current Speed 400, the new Scrambler and exports, we should be around the 10,000 mark. And that's a very nice place to be in this segment. It's very profitable, and particularly exports at 3,000 a month and with the rupee at 83 is not a bad thing at all.
Well, you can catch that entire conversation at 3:30 p.m. right here only on CNBC TV 18. Lots of interesting takeaways. The road ahead with Rajiv Bajaj. Anand Tandon is with us on the next leg of the show. Anand, good afternoon. Good to have you on as always. Since we were just listening to the highlights of that conversation with Rajiv Bajaj, you tell us your take on the stock. It's been one of the best performers on the index this year. Question is, can one still buy? Should one still buy?
Well, not for the near term. As you heard him say, he is not really expecting the festive season, which is what most people bet on at this time of the year, to actually deliver great numbers in terms of the volume of sales. And, as I have maintained in the past, while there was a valuation opportunity sometime earlier, the challenge now is that, you have a lot of companies coming up with new models, and including those which are unlisted. So therefore, the competition continues to remain quite high. On the premium space, there are many new players coming in with JVs. and on the lower side, Bajaj does not figure. So broadly, I think the delta from here is going to be a little more difficult to get, especially in terms of where the valuation already has reached.
Other interesting pockets for investment? Any other themes that you've picked up lately, Anand?
Well, obviously the market at this level is stretched, especially given the fact that the mid caps, etc., also have done, and the small cap have done exceedingly well. So it's not so easy, and therefore you have to really extend your time frame. I think the only options you're really looking for is the fact that you will expect to see some amount of consumer sales this quarter coming through, and therefore the volumes could be something that you may want to watch out for. Consumer discretionary therefore looks like a place that one can continue to hide. Financials, obviously loans, and to my mind now increasingly again companies like insurance, etc., continue to offer bets, because at the premium end you will find more people having a lot more savings. So the saving side as well is improving quite a bit. So the financials, consumers, and to some extent perhaps the export market in the form of pharma may still provide some opportunities, though that again is beginning to be quite thin.
All right, Anand, just hold that thought. I want to pull up the Nifty Financial Services Index. That's the one that's playing out expiry. So just pull up the intraday chart out there. That index has moved to the low point of the day. So just thought we'll highlight that for our viewers. Intraday chart comes up for you on the screen. Well, we just have a few minutes to go before we wind down trade. For the time being, though, we'll slip into a short break. But before that, I think we can get you some market opinion as we get into that break. We'll come back and, in fact, we'll continue our focus on the markets. Stay with us. We'll come back and discuss stocks.
Okay, welcome back. Well, 65 points lower on the Nifty. 20,128 is where we're at. Let's just actually go back and look at the Nifty PSU Bank Index, which, as we highlighted, was selling off sharply. And, just what, 3%? It's still up 3% on the day, but it's lost almost, I think, 2%, 1.5%, at least 1.5% from the day's high. The high was 52.92, and we're at 5,200 now. So that's a 100-point drop from the day's high on that particular index. So that's what's going on. You look at stuff like Bank of Maharashtra, it's up 5%. It was up at 11-12%, I think, when we started the show at 2:30. And I think, I suspect that would be the case with a lot of names. Actually, why don't we look at these, specific names from the PSU Bank space to understand what's going on. So let's start with Canara Bank if we can. Canara Bank has just got about 2% in terms of gains. The high was almost 380 or so. That's come off sharply to about 371. Bank of Baroda will come up. That went up to being about 5% higher. It's gains cut in half. Union Bank, just about 3% left. Punjab National Bank, Bank of India. I mean, actually, the only one which is sitting with strong gains still is Indian Overseas Bank. And I think IOB was the one which Nigel and Surabhi were earlier highlighting, is now trading at some almost 3.5 times price to book. Abhishek also had that one, but that is still going pretty strong in double digit. Actually, 3 names in double digit gains: IOB, UCO Bank, and this Central Bank, which is still up in double digits. So that's the overall picture. That's the one sector which was up the most, and that's the one which has given up some of those gains as we go into market closing here. Any thoughts, Anand, on something like Indiabulls Housing? It's done well. The stock's done very well. Some rumblings of change. Erstwhile promoter is out, has completely sold out his stake. Apparently, there is a sort of change in branding afoot, which should happen pretty soon. New investors into the company. Any thoughts, Indiabulls Housing?
Well, yes, I think both the Indiabulls companies, what was earlier the real estate business as well as the housing finance business, have had a change of ownership. While the first one is still pending certain issues with, some court cases, etc. But that also, to my mind, looks something that once the deal goes through, potentially has some upside because of the kind of portfolio they will be having. Similarly, the housing finance company, as you just mentioned, there with a change of guard, there is likely that the kind of discount that the group used to trade at may actually go away, and there is a potential that the business will become a little more robust. So from a valuation perspective, it's good. Typically, what happens with most of these changes is that it takes a while for it to actually play through for all the regulatory reasons. So one must have a little bit of patience. But I think you may find that they could be rewarding in the long term.
Anand, we'll leave the conversation here for now. Thank you very much for joining in. Wishing you a happy Ganesh Chaturthi. By the way, the markets are virtually going to close at the day's low. So 20,120 is where the Nifty currently is. It's down 70 points. It started the trading session at these levels. It attempted a bit of a recovery, went to the flat line. But since then, in the last 1 hour, courtesy a bit of profit booking in the PSU banking names, the index once again is practically at the day's low. Remember, the global setup has also been muted today. US markets were weak in Friday's trade. This morning, Asia has been subdued, and Europe too is trading with cuts of close to about 1%. The big losers include HDFC Bank, that's down 2%, reversing some of last week's gains. Hindalco is the top Nifty loser, 2.25% gone. Bharti Airtel last week had hit record high levels above 900 rupees, so some profit booking visible there. IT names, Infosys, Wipro ending with cuts of over 1%, and Reliance Industries drags its feet. On the gaining side, Power Grid is your top Nifty gainer. Titan hits a fresh 52-week high, and you had strength in M&M, Britannia, Hero MotoCorp, Bajaj Auto too. On the back of this Rajiv Bajaj statement, ends with a gain of 1%.
Well, some profit taking on the PSU banks. Right in the last 10-15 minutes, we've seen some sharp drops. IOB, for instance, that was sitting on a 20% gain, is now going home with a 15% gain. It's not small by any measure, but yes, there was profit taking coming in. Likewise for UCO Bank, still a gain of about 13%. Central Bank of India still a gain of about 7 to 8%, but these were double-digit gains just a while back. Some profit-taking setting in. IDBI Bank 4%. So this is one active pocket of the market. Beyond that, PFC's had a good session, 3% up. BEL on fresh order announcements, about 3% higher there as well. So a lot of these PSU names having a good session. Then you have the likes of REC, PFC and REC. Power stocks were doing very well on the large cap screen, Power Grid and NTPC. And then the power financiers have had another good session. On the flip side, just to talk about where the profit taking was apparent, Lemon Tree stands out, price and volumes. High volumes, lower on price, 4% lower over there. And some of the railway stocks, IRFC, RVNL, TexRail, RailTel. After this big, massive railway rally that we've had, they've seen about 4-5% come off today. Well, that is the market at the end of Monday. We are closing with the Nifty, looking at a 70-point cut, 20,122, and a profit-taking day for mid-caps as well as the Bank Nifty. With that, it's a wrap on this edition of Closing Bell. Many thanks for being with us. Once again, wish you a very happy festive break. Enjoy the Ganesh Chaturthi celebrations. But before you get to that, do catch our exclusive conversation with CEO of Bajaj Auto, Rajiv Bajaj. That's coming up right after this break.